If you had your eyes on the market today, you would have seen something spectacular. Exactly what I was talking about in the last video. We're going to go over this thing right now. All right, I'm looking at Tesla on the daily. What we see is that huge red candle. You guys see that? Okay, next to it, the previous day here, this was a 2 to the upside. This was a 2 to the downside. This was a 1 on the inside because it did not cross the top or the bottom of the previous day's candle. Okay, so we have a 1, 2, 2, 2 to the upside because it didn't break to the bottom, but I guarantee if there was another hour in the market, it may have gone down a little more, but even after market, it kind of just sustained itself. So anyway, what we see here is exactly what I was talking about in the last video, and it was a perfect example of how to play it today. So we look at this previous day's candle, okay? So we know that the candle started on its way up. There was a gap up in the morning, and then it started sliding. So what we want to do is when we see that, it's a 2 to the up, or it could be a 2 to the bottom. That's rule 1, okay? It crosses the previous day candle up or down. Can it surpass it and go into a number 3 candle, which is breaking both sides? Well, we can anticipate that once it goes past the previous day's candle at the 50% mark. And what we do is you can calculate it by math, 750.33, 716.77, or whatever that is, and then add them and then divide by 2 and you'll have the average there. But you can also get your Fibonacci and go to the top of the previous day, to the bottom, or vice versa. It doesn't matter because I take everything out. The only thing I have is the 0, 1, and 50, okay? The 50%, the halfway mark, okay? So what we have is like this, okay? So imagine, let's make this bigger here. Imagine you're looking at this and the candle here, as the price action is working, and the candle here and the price action, as the price action is working, let's just act like this was a price action. So as the price action is going down, it's going down, it's going down, it's going down, 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 down. Okay, we're getting close to our 50% mark. Okay, boom, it hits it. And what did it do? It continued down and then it had a little dip back up at the end. But once it hit here, that was our signal that we have some sort of assurance that it is going to try to break the bottom. Or if it's in the other case, then it's going to try to break the top. But exactly at the 50% mark, that's where you want to go in. So we'll get this out of here, clean this up a little bit. So we hit the 50 and the candle just kept going and going and going. Well, what time could you have gone in? Let's go to a shorter time frame. Let's look at the hour. Okay, here's our Fibonacci, our 1, 50, and 0. Okay, that's the halfway point. This is the top of the previous day. This is the bottom and everything that happened in between. This is the start of the day. Like I said, it gapped up and then it dropped. But could you have gotten in here after it broke on a 2 candle to the downside? Sure, you could have. But again, we're waiting for confirmation. We're waiting to see price action. Could you have done it again here? Possibly, yes. Could you have scalped this thing the whole way down on a short, 5-minute time frame or a 1-minute time frame? Sure you can. But looking at the big picture, okay, well, you see this thing heading south, and we know that it's going towards a 3, to be a 3. So we are looking to hit that 50 right there, okay? As the price action was going down, we had a little bounce here off the bottom here. It didn't stick, so hang on, let's get some confirmation. So what happens? It starts going and it blows right past it. So there is your entry point right there. Okay, you've busted past the 50% of the previous day's candle. There's your justification for going in. That's your confirmation. Yeah, you could have got in at 11:30 and then rode this thing out to the end of the bell. Okay, that would have given you, if you shorted this, 733.68 minus 719.21. That would have gave you about $14 per share. On a short, that would have lasted like an hour and a half. Not bad, not bad. If you would have done a put option, you would have made a killing. I got into this trade this morning at within this candle here. Okay, I got in early and I tried to get in and out, and I set a stop somewhere around the base here, and I got stopped out with a loss. I had a $40 loss because I set tight stops, and the thing finished at 600 and something, 630, I think it was 630. So I ended up leaving 590 something on the table if I would have had my stop set higher, but I was not willing to lose more than where I set my stop. And that's what you have to get comfortable with. And if you're just starting, set your stops very tight because you want to minimize your losses, because you're going to have a lot. When you're starting, you're going to have a lot. So once you gain more, grow more, mature more, and have a bigger account, then you can take riskier trades and set higher stops that you can lose $100 or whatever the case is. It's up to you, but minimize losses at the beginning till you know what you're doing, till you can handle your emotions and manage them. Then you can risk more. Trading is about risk and managing risk and managing losses. That's it. That's as simple as trading is. But let's go down to look at like the 15-minute chart and see how this played out. Again, we had the gap up, then a down candle, then boom, it was going up, and then here we are again, and it just took off, started heading down south, had a little consolidation here, and then boom. You know, a lot of people talking about the inflation numbers, everything like that, that's affecting especially SPY. That's another one that would have been a good put option play today, or you could have shorted the thing. I know guys that's all they trade is SPY, and they're making killing. Either way it goes, they're making a killing. So this is what happened today. Again, going back to the daily here, we saw exactly what was supposed to happen, and it did. We had the previous day candle right here. We had a 2 to the upside at the beginning in the morning, and then we started seeing it retrace back. We put our fib on the previous day candle, and we watched, and we watched. And what ended up happening? It surpassed the halfway point, the 50%. That's a 50% rule. Sarah the sniper STRAT sniper, or whatever she calls her name, she coined this 50% thing. And once it surpassed that was all you needed to know to follow this thing all the way down south. And you could have made a nice little package today on this trade with Tesla today. This is exactly what I was telling you in the previous video, and I was watching it this morning. I should have had it live, but I didn't because I had things to do. I was in and out of that trade so quick, I think 10 minutes or something, and a $40 loss. But hey, you win, you lose. I just set my stops too low, too tight, and missed out on a $600 run, which I'm kicking myself. But again, that's emotions. You know, I'm not willing to lose that much yet, so I set tight stops. And you should too if you're just starting, because when I started, I did not set any stops, and I was watching stuff just go to zero before my eyeballs, and blood everywhere, and just destroying accounts. So it was a hard lesson to learn, and nobody should go through that, because you should have your emotions in check before you even start trading, because that's what's going to kill you. You are your worst enemy. But anyway, this was excellent today, what we saw, this example with Tesla today. Hopefully you guys got in on it, shorted the thing, got a put, made some money. This is how the strat works. It is so simple. It is so simple. All right, guys, we'll check you on the next video.